Hello, ladies and gentlemen. Thank you for standing by. Welcome to the webinar today, brought to you by ComplyRight. Mandatory ACA reporting in effect, how to meet the new requirements. My name is Stephanie Thomas and I am your host today. Thank you everyone for attending this webinar and welcome. I'd like to review a few housekeeping items before we begin. If you would like to ask a question, simply use the chat feature located in the lower left corner of your screen. You can ask questions at any time. If you have any audio trouble, please message us in the chat box and we will assist you. Please ensure your speakers are turned on with the volume up. Finally, with all of the information we will cover today, please note you will receive an email with a copy of the slides and a recording of the presentation by the end of the week to catch anything you missed. Now, I am pleased to introduce you to our speaker today, Stacey H. Barrow, Benefits Attorney and ACA Expert. Stacey, thank you for being here today.
Thanks, Stephanie, and good morning, good afternoon, everybody. It's Stacey Barrow here from Marathis, Barrow, and Weatherhead in Boston. And we are a full-service employee benefits, executive compensation, and labor and employment law firm located in the heart of Boston. I practice basically exclusively in the area of employee benefits. We have clients from around the country, and I'm also one of the co-authors of the definitive treatise on the ACA published by Thompson's, and that's the New Healthcare Reform Law, What Employers Need to Know. And we actually just released our 6th edition that's available now, and that's a full about 600-page Q&A guide to everything you ever wanted to know about healthcare reform. Before we start today, I wanted to just take a quick poll and get an idea as to how many full-time or full-time equivalent employees that you may have, and these terms will make sense to you in just a second. So if you want to go ahead and check the right button there, and we'll just give folks 30 seconds or so to click your responses in there, see them flowing in. And again, we're just asking here number of full-time and full-time equivalents. So results are that most of you answered 50 or more. And you certainly are in the right place then, because this employee count makes you an applicable large employer and responsible for meeting the ACA reporting requirements this 2016 tax filing season. So we have a lot to cover in the next hour, so let's jump right in. As you know, the Affordable Care Act, or ACA, represents the most comprehensive changes to the nation's healthcare system in decades. It was signed into law in March of 2010 and upheld by a Supreme Court decision in June of 2012. One of the ACA's primary goals was to expand health insurance coverage to millions of uninsured Americans by guaranteeing access to private health insurance and expanding the Medicaid program. The law also put into place the employer shared responsibility provision, which places new mandates on employers who have historically been the biggest suppliers of private health insurance in this country. In today's webinar, we're going to talk specifically about one of the latest aspects of ACA compliance for employers, and that's the annual reporting. The employer shared responsibility provision requires certain employers to file information returns with the IRS each year, as well as provide summary statements to employees. The 1095 forms capture certain health insurance coverage details for full-time employees and their dependents, including verification that you've offered minimum essential coverage that is affordable and that provides minimum value. This webinar will guide you through the overall process of 1095 filing and hopefully clear up some of the confusion surrounding the rules. We're going to cover the origins of ACA reporting, the types of businesses affected, including applicable large employers, how to calculate full-time equivalent employees, the definition of minimum essential coverage, which of the 1095 forms to file with tips on proper completion, as well as deadlines and filing penalties. So a bit of context here. The IRS first released regulations in March of 2014 requiring ACA reporting for certain large employers and smaller self-insured employers. Although the rules were optional for 2014, they're now mandatory for the 2015 calendar year for all affected employers, and that's why we're all here today. So the ACA reporting requirements are enforced by two new sections of the Internal Revenue Code. We have Section 6055, which applies to providers of health insurance coverage, such as health insurance carriers, employers, small employers that sponsor self-funded health plans, and any other entities that provide minimum essential coverage, such as sponsors of multi-employer plans, providers of governmental coverage like Medicare and Medicaid. Section 6056 is a little different, and that is directed towards applicable large employers, or ALEs, those employers that have 50 or more full-time employees, including full-time equivalent employees. Section 6056 also requires ALEs to share coverage details with employees so that they can determine if they qualify for a premium tax credit to buy health insurance on their own through the health insurance exchanges that were set up under the ACA. And through this mandatory information reporting, Section 6055 and 6056 of the Internal Revenue Code help ensure compliance with the ACA, particularly the employer shared responsibility provision, which applies specifically to ALEs. So basically, if you're an ALE and you don't offer health insurance to your full-time employees that meets the law's requirements for minimum essential coverage and affordability, then you may be subject to penalties. So generally speaking, whether or not your company is responsible for reporting the health insurance status of your employees depends on the size of your business and the type of insurance you maintain, for example, an insured product versus a self-insured product. The reporting comes into play, as I mentioned, for applicable large employers that meet the 50 or more full-time employee count, as well as all self-insured employers regardless of size. And the IRS forms that are used to report this information are the 1095B and the 1095C, along with the transmittal forms, which are the 1094B and 1094C. So are you insured or self-insured? This comes up a lot in discussions about ACA reporting, so let me clarify that now. A self-insured plan, also sometimes referred to as self-funded, an employer with this type of a plan generally contracts with an insurer or a third-party administrator to administer the plan, but the employer pays the medical claims out of the company's general funds. With a fully insured plan, on the other hand, you're paying the insurance carrier premiums, and it pays the health care claims based on the coverage benefits outlined in the policy. Examples of insurance carriers are Humana, Blue Cross Blue Shield, or Aetna. So when you're under a fully insured plan, you're shifting the risk to the insurance company rather than retaining it as you would under a self-insured plan. So are you an ALE? The businesses that are most impacted by the law's new reporting requirements are larger employers, those with 50 or more full-time employees, including full-time equivalent employees, on average in the prior calendar year. And so let's get into those distinctions a little bit now. So a full-time employee averages at least 30 hours of service per week, or the monthly equivalent of 130 hours in a month. For hourly employees, you have to count the actual hours that are worked. For non-hourly employees, such as salaried employees, you can either count their actual hours worked, or you can use one of two crediting methodologies. You can use what they call a day's worked equivalence, which is crediting 8 hours for each day where an employee has at least 1 hour of service, or a week's worked equivalence, where you credit 40 hours for each week when an employee has at least 1 hour of service. So you can see it generally is beneficial to try to track those actual hours worked. With all of the above, you also must include hours paid, like vacation, sick time, disability, even unpaid jury duty, USERA, other leaves of absence like FMLA. You're looking at the total hours of service to the employer, not just the hours worked on the job. And then additionally, based on some recent guidance that came out in December, you can exclude payments made to a current employee under a short-term or long-term disability plan from hours of service when the premiums are paid by the employee on an after-tax basis, or they were paid by the employer but were included in the employee's gross income. So we may see more employers start moving to an after-tax model for their disability plans, because then the benefits won't be considered to be treated as hours of service. Now, how about full-time equivalent employees? Your part-time workers also contribute toward your employee count. So if you employ a combination of full-time and part-time employees that add up to 50 or more, then you must offer minimum health insurance coverage or face potential penalties. Again, a full-time equivalent is a combination of part-time employees that counts as a full-time employee. To determine the number of full-time equivalent employees in a month, you add up all of the part-time hours of service in a month up to 120 per employee, and that is 120. I know 130 is the monthly average for a full-time employee. This is a little different. We're here to calculate full-time equivalents on this page for purposes of the applicable large employer determination. So here, we're adding up the part-time hours up to 120 per employee per month, and you're dividing that total number of hours by 120. And then you do this for each month of the year, and at the end of the year, you drop any remaining fractions after you calculate your average. So as an example, if you have 7 employees working 20 hours a week, you have 4 FTEs. You have 7 multiplied by 20 hours per week, which is 140. 140 times 4 weeks in a month is 560. The 560 divided by 120 is 4.66. And then at the end of the year, when you have your averages for each month, you'll round down that fraction. And then once you've calculated your FTEs, you add that number to your total number of full-time employees on staff to determine whether or not you're an applicable large employer. One other thing to keep in mind here is that an applicable large employer may be a single entity, or it can consist of a group of related entities like a parent and a subsidiary corporation, or other affiliated entities like a brother-sister type of corporation. If the combined number of full-time and full-time equivalent employees for the whole controlled group is large enough to meet the definition of an ALE, then each employer in the group, which are referred to as ALE members, each ALE member is part of the applicable large employer, and they are each subject to the employer shared responsibility provision, even if they wouldn't be ALEs on their own. So if you have a parent and a subsidiary, the parent has 100 employees, the subsidiary has 5, they're both applicable large employer members, and even that 5-life subsidiary still has a filing obligation. So this is probably an obvious point, but keeping track of the number of full-time and full-time equivalent employees as it pertains to your ALE status is critical. This classification is determined each calendar year, and it depends on the average size of your workforce in the prior calendar year. And I know this is all easier said than done. The actual calculation of employee hours for ACA reporting requirements is a huge undertaking, and for this reason, you may need to rely on a dedicated time tracking software or choose to outsource this responsibility to a payroll vendor or a benefits administrator.
Stacey, hey, are you there?
Yes.
I just wanted to chime in and say that some of the participants are saying the audio is a bit muffled. If you could maybe raise your voice a bit, that might be a little bit clearer for everyone.
Sure. Yeah, absolutely. Okay, so moving on a bit to self-insured employers and the 1095B, what if you're not at the 50 or more employee count? There is considerably less reporting responsibilities for smaller businesses, which the ACA generally defines for these purposes as those with 50 or fewer full-time employees, including full-time equivalents. Self-insured businesses will need to fill out the 1095B and the 1094B transmittal form to report name, address, and Social Security numbers of covered individuals if they are in self-insured plans. The good news on the filing side is that for small businesses that are fully insured, you don't need to file anything. Okay. So for the purposes of this webinar, though, we're really going to focus primarily on applicable large employers and their responsibilities under these reporting rules. So before we get into the details of the actual forms you'll be filing, let me explain what minimum essential coverage is. For purposes of reporting, minimum essential coverage, or MEC, refers to a legally definable level of coverage. So under the employer shared responsibility provision of the ACA, you may be penalized if you don't offer minimum essential health coverage to at least 70% of your full-time employees and their dependents, and at least one full-time employee receives a premium tax credit through the health insurance exchange because of the failure to have been offered minimum essential coverage. And that 70% number changes to 95% of full-time employees for 2016. There's a second type of penalty that can be triggered if you offer minimum essential coverage, but the coverage that you offered either isn't affordable or it didn't provide minimum value, and one employee declined your offer of coverage and went and received a premium tax credit through the exchange. Most broad-based medical plans meet the legal requirements for minimum value, and that's where the plan pays at least 60% on average for covered benefits. Basically, any group health plan you get on the open market, whether it's a small group plan or a large group plan, is going to provide minimum value. Regarding affordability, the premium for the lowest cost self-only minimum value coverage should be approximately 9.5% of an employee's gross household income, rising to 9.66% of household income in 2016. You can also use 3 safe harbor tests to determine if the coverage you're providing is affordable. I'm not going to cover them fully right now, but just so you're aware, there's the Form W-2 safe harbor, the rate of pay safe harbor, and the federal poverty level safe harbor, and I could take questions on those at the end. So I've mentioned minimum essential coverage as a necessary standard quite a bit already. I'm going to go through this quickly, but for reference, the types of insurance that generally meet the standard of minimum essential coverage include your government-sponsored programs like Medicare, most Medicaid programs, CHIP, most TRICARE, and most VA programs. Any employer-sponsored coverage, any job-based plan, and that includes retiree plans as well as COBRA coverage. They also provide minimum essential coverage. Individual market plans, individually qualified health plans that you enroll in through the federally facilitated or the state-based marketplaces, and then most any other health insurance product purchased individually through a broker or directly from an insurance company also is minimum essential coverage. Grandfathered plans also are minimum essential coverage. Generally, any plan that existed before the ACA became effective and that hasn't changed continues to provide minimum essential coverage. And then there's a catch-all at the bottom for any health benefits that are recognized by the Department of Health and Human Services as minimum essential coverage, and this would include things like certain expatriate plans. What minimum essential coverage does not include are fixed indemnity coverage, like the hospital indemnity plans, life insurance, dental, or vision coverage. Okay, so now we get to the fun part, actually filling out these 1095 forms for the ACA reporting. To satisfy the reporting requirements, fully insured and self-insured applicable large employers must complete Form 1095-C and the 1094-C transmittal form. Okay, so if you are a fully insured employer, you'll complete parts 1 and 2 of the 1095-C, basically the top half of the form, while those of you with self-insured plans will complete parts 1, 2, and 3. Every employee of an ALE who is eligible for insurance should receive a 1095-C. That means eligible employees who decline to participate in an employer's health plan still receive a 1095-C. So specifically, anyone who is required to be treated as full-time under the ACA for 1 or more months of the year needs to receive one of these 1095-Cs. So to report the necessary information to the IRS and to furnish a form to employees, you'll need to capture a number of details as follows. Part 1 of 1095-C is where you're going to enter identifying information for the employee, such as name, address, and social security number, as well as identifying information for you, the employer, such as name, address, and employer identification number. Part 2 is all about the offer of coverage. In the 3 lines in Part 2, you'll enter information about the health coverage that you offer by month, if any, the cost of the least expensive monthly premium the employee could have paid for self-only coverage, and the months that you met an affordability safe harbor. If you are self-insured, Part 3 is about the health insurance that was supplied to all covered individuals, including the employee, spouses, dependents, retirees, and COBRA enrollees. You'll need Social Security numbers to report months of coverage for the family members, or if they're not available, you can use dates of birth. This information is not completed by insured employers because it's captured separately by the health insurance provider themselves through the 1095-B. So you're only ever touching Part 3 if you are self-insured. So the bulk of the work in completing the 1095-C will be with lines 14 through 16 in Part 2. And although this subject is too complex to cover fully in a 1-hour webinar, we wanted to share a few tips with you. The offer of coverage on line 14, and that involves 9 different indicator codes, it describes whether minimum essential coverage was offered to an employee. This is all about the offer and not necessarily the actual coverage that the employee might have or not have. Quick tip here, though, if one code applies for the entire 12 months, you only need to enter it once in the all 12 months column of the form here. Line 15, you're reporting the employee share of the lowest cost monthly premium for self-only coverage. This helps the IRS determine if affordable coverage was made available to the employee. You're only going to put an entry in line 15 if you use code 1B, 1C, 1D, or 1E in line 14. You do include cents, the dollars and cents, and you don't round the numbers. If you have made what they call a qualifying offer and you're able to enter code 1A on line 14, nothing would be entered on line 15, and line 16 can be blank as well. Code 1A is indicating you've made a qualifying offer. By definition, it's affordable under the federal poverty level safe harbor, and therefore you don't need a safe harbor or other relief code to use in line 16. You can simply leave it blank. Line 16 also involves 9 different indicator codes, and these again are safe harbor codes that indicate whether an individual was employed during the month, whether he was eligible and or enrolled in coverage, or if any affordability safe harbors or other relief might apply. In a nutshell, you're giving the IRS a reason why you shouldn't be penalized under the employer shared responsibility provision for the employee on whom you're reporting. And again, you only fill out line 16 if a code applies to the employee for a particular month. Now, the IRS, in their inimitable fashion, they did make line 16 voluntary, but if you can, you really want to make sure you put a code in line 16, because that's the only way you're telling the IRS why you shouldn't be penalized on the employee on whom you're reporting. Is it because he enrolled in the plan? Is it because he was part-time? That's where you give that information. So we've addressed the 1095-C, but that's not it when it comes to ACA reporting. There's also the 1094-C transmittal form that summarizes the 1095 filings submitted for the season here. It basically acts as a cover sheet, and it includes identifying information for your business, such as name, EIN, and address. It includes information about whether you offered coverage to at least 70% of your full-time employees and their dependents in 2015, and that threshold changes to 95% this year for 2016. They're also asking for the total number of 1095-Cs attached, information about members of the aggregated applicable large employer group, if any, full-time employee counts by month, total employee counts by month, and eligibility for transition relief. A quick tip on the 1094-C as well. You can complete multiple 1094-Cs for your business, say for a different region or division, but only one authoritative transmittal that consolidates all of the data for that particular tax ID number. So in other words, each entity with its own tax ID number is going to have its own authoritative transmittal. So how are we doing? We've just worked through a lot of detailed information, so why don't we take a break and answer another poll question. This time, I am curious what you know about the deadlines for ACA reporting. Are you aware of when to get statements to employees in addition to filing with the IRS? The questions here are, or the question is, the filing deadline for the 1095 forms are employees in March, IRS in June, employees in March, IRS in May, or depends on the size of the company. And the answers are rolling in, more or less as I expected. This question was a little bit tricky, and that's because you can choose either to paper file or e-file with the IRS, which involves two different deadlines. Unless you're a large employer and you have 250 or more employees for whom you're filing, in that case you're required to file electronically, but assuming you're e-filing, the correct answer would be A, employee forms due in March, IRS forms in June. But of course, if you're filing on paper, then the May date is correct. So to help you manage the process, let's talk about timing and the specific dates. So until late last year, the schedule for filing and distributing the 1095s was the same as W-2s and 1099s, generally the end of January. This has changed, though, for this first year of implementation. On December 28th of 2015, the IRS issued Notice 2016-4, which extended the deadlines as follows. March 31st for distributing the 1095 forms to employees, and then end of May for paper filings, or end of June for electronic filings to the IRS. A note about electronic filing, not only is it a more efficient way to file with the IRS, and it also gives you another month to get your ducks in a row, but again, it's required if you file at least 250 forms. So if you're a bigger business and you're filing 250 or more of these forms, understand that e-filing is your only option. There are forms to file if you want to apply for a waiver, but that kind of exceeds the scope of what we're talking about today. So in terms of avoiding filing penalties, obviously you have to comply with the ACA reporting requirements or risk fee penalties. Penalties can apply for a variety of reasons: failure to file, failure to furnish the recipient statements, failure to file on time, failure to file electronically when you're required to do so, meaning if you're filing 250 or more forms. And so beginning this year, the IRS penalty for failing to file or furnish these ACA forms more than doubles from 100 to 260 per return in some cases, with a cap of about $3 million. Obviously, this is not something you want to mess around with, and given the delay in other things like the Cadillac tax, you can expect that the IRS will be enforcing this employer shared responsibility provision and the reporting. That being said, be aware that there is a one-year transition period where you won't incur a penalty as long as you've made a good faith effort to comply with the reporting requirements, but you accidentally file incorrect or incomplete information. This relief exists only for filing incorrect information, not for complete failure to file outright. You do get a break if you did your best to capture everything that was necessary, but you fell short. But certainly you're not going to get any relief if you completely ignore filing requirements altogether. As you might imagine, the information gathering process for ACA reporting can be quite a challenge. To capture all of the data required for the 1095 forms, you may need to pull from 4 major sources or internal departments. It's going to touch on HR, payroll, benefits, and time and attendance systems as well. This is going to require careful coordination and oversight to compile the information month to month and then complete the forms accurately and in a timely manner. Strict security with sensitive employee information is also necessary. Using a tax filing solution that is SOC certified and fully compliant, like eFileforBiz.com, can provide an added layer of protection with this type of data. So a few other essential do's and don'ts here to ensure a smooth filing process in the coming months. You do want to notify employees that they'll be receiving a 1095-C and that they may need information from it to complete their tax return for 2015. Don't file more than one 1095-C per employee. If your organization has different divisions with different benefits and an employee moves between divisions during the year, you'll need to consolidate data onto one 1095-C. Do file corrected returns as soon as possible after an error is discovered. The way that penalties work is the penalties are reduced if you catch incorrect errors within several months of the forms being filed. Don't file more than one 1095-C authoritative transmittal for a particular employer identification number. This acts as the final transmittal representing the total filings for the season. Okay, so with that, we've actually reached the end of the prepared portion of the webinar. To wrap everything up, let's review a few key points here. Beginning in March 2016, regulations under the Affordable Care Act require certain employers to file annual information returns with the IRS and deliver employee statements with health insurance coverage information. Most impacted by these regulations are applicable large employers, and those are employers with an average of at least 50 full-time, including full-time equivalent employees in the prior calendar year. Self-insured employers, even if you have fewer than 50 employees, you must report and file as well. To prepare for 2016 and to fill out the 1095-C and the accompanying 1094-C transmittal form, applicable large employers will need to track whether they offered full-time employees and their dependents minimum essential coverage that meets the minimum value requirements and that is affordable. Otherwise, you could be subject to penalties under the employer shared responsibility provisions of the ACA, otherwise known as the employer mandate or pay or play. You also need to mind the filing deadlines to avoid IRS penalties, distributing employee statements by March 31st and filing electronically with the IRS by June 30th. Relying on a reputable IRS-authorized e-file provider like efileforbiz.com can help you meet the demands of the new ACA reporting requirements. More information on this secure and efficient service will be available after today's presentation. I know that's a lot of information to cover in less than an hour. I want to thank you very much for taking the time to participate in today's webinar. This ends my prepared comments, but I did see some questions come in through the chat box that I am happy to address. So let's maybe go ahead and I will start looking at those questions. We have a bunch that have come in. So I'll go ahead and read the question and then give the answer. First question is, if your company has partners/owners that are not considered employees, but they have insurance through the company health plan, do you have to issue a 1095 for them, and will they count toward your employee count to determine whether the company is an ALE? So folks that are owners and that are not employees, they do not count toward the ALE determination, and they are not treated as full-time employees for reporting purposes. So if you are a partnership and you have partners that are paid on Form K-1 and not a W-2, they are owners and not employees, and they don't get a 1095-C unless they're enrolled in a self-insured plan. And they also, in any event, do not accumulate toward that 50 FTE threshold. Likewise, owner employees of an S Corp. If you have an S Corp and the owners are greater than 2% shareholders, even though they get W-2s and K-1s, they are still owners and not employees for ACA purposes. They do not accumulate toward the 50 employee threshold, and they are not required to be provided a 1095-C unless they are enrolled in self-insured coverage. And when I go through these questions, I'm going to answer them generally to the best of my ability here. Just as a reminder, if you do need direct legal advice, we would recommend that you contact a qualified ERISA attorney. We are happy to help. You can also direct questions to ComplyRate as well after the webinar. Next question is, I work for a company based in Toronto globally that has about 1,200 employees with only 15 full-time employees in the U.S. Are we considered a large employer as an entity, or do all 50 employees have to work in the U.S.? So in this situation, you're basically looking at U.S. employees. When you have employees working in other countries, their pay is considered to be payment from non-U.S. sources, and that is excluded from hours of service. So that the employees in Toronto as a whole have 0 hours of service, and so they're basically excluded entirely from the employer mandate calculation. And so the 15 life group in the U.S. would generally not be considered an applicable large employer. Next question is, so it's not hours worked, it's all hours. And I think that's in response to the slide about hours of service. And yes, it's not simply hours worked. It's hours worked plus any hours for which the employee is entitled to pay. So paid leave, paid sick time, paid vacation, and certain unpaid leaves like FMLA, USERA, and jury duty also count as hours of service. Next question is, we are in ALE. We were self-insured through September 30th and then fully insured. Do we have to file both Forms 1094 and 1095? Well, I think the real question is, do we file both the B forms and the C forms? But to try to answer this question, you're going to be completing the C series forms, the 1094C and the 1095C. So remember, the 1094C is just that cover page. So you'll be completing the 1095Cs, and you'll be completing Part 3 for anyone who is enrolled between January 1 of 2015 and September 30th of 2015. You're going to mark their months of self-insured coverage in Part 3, and then to the extent employees enrolled in fully insured coverage at the latter quarter of the year, they'll separately get a 1095B from the insurance carrier. Next question is, do you calculate the coverage on the lowest paid employee in the company or on the federal income level? Well, when determining if coverage is affordable for a particular employee, whether this employee on whom you're reporting has an affordable offer, we are basing it on his income. Someone who's making $150,000 a year, their coverage is generally going to be affordable to them, where someone making a lot less might not have an affordable offer, even though both are being charged the same premium. So when you're, say if you're using the W-2 safe harbor for salaried employees, you'll be looking at that on a per employee basis, and maybe there's some salaried employees that qualify and some that don't, and you'll have to get it right when you're filling out the 1095C, and in particular line 16. Next question is, For employees that decline an offer, should we have the 1B code for them, as in boy, which is the employee only, as this is the minimum plan we offer, or should we enter code 1D if they are married but still decline the offer? Okay, so this question is asking about the line 14 codes, and they're asking what's the maximum coverage level you offer. If you offer full family coverage, you put 1E regardless of whether the employee is enrolled or married or single or what have you. You're just reporting the offer of coverage, and if every employee can take family coverage if they were to have a spouse, then everyone gets code 1E in that line 14. Next question is, I stated if you put 1A in line 14, you don't fill out line 16, but if the employee took insurance, shouldn't you put 2C in line 16? One of the benefits of using code 1A is that it's a qualifying offer, and so it's by definition affordable under the federal poverty level safe harbor. And so you don't have to put any safe harbor in line 16 because by definition the coverage is affordable. And further, the IRS has indicated on their webinars that when you use code 1A in line 14, you should in fact leave line 16 blank. If you want to go ahead and put 2C in there, it's fine for employees who enroll, but the whole point of using 1A is that your reporting is simplified, so you can simply put 1A in line 14 and leave lines 15 and 16 blank. I think this one got cut off. It says question regarding 1094C and ALEs. If you want to repose that, I can answer it. Next question is, can I go into more detail on the coding? I would be happy to. Just let me know a specific question and I can go through the coding detail with you. What if a retiree is also a subscriber? Do I need to go back through the timesheets to verify which days of what month they may have worked and then enter a different code in the box for the month worked? So there's a lot of moving parts to this one. We're talking about retirees. So in the year following retirement, there is no reporting on a retiree unless they're enrolled in a self-insured plan. If they were enrolled in a self-insured plan and they are not a full-time employee for any month of the year, then you put code 1G in line 14, leave lines 15 and 16 blank, and then put the months of coverage in Part 3. If the plan is fully insured, there is no reporting on retirees after the year of retirement. So I'm not sure why you're suggesting you need to go back through timesheets. Hopefully if they're a retiree, they're not working. But if there are further questions, I can circle back on that one. On the 1094C, we have two companies with separate FBIN numbers. Do we combine them into one authoritative transmittal form? I will be doing a form for each company. No. Each entity with its own FEIN has its own separate authoritative transmittal. There is no rolling up into one authoritative transmittal form. Each company with their own tax ID is separately responsible for the forms and for the penalties. Next question is, if an employee worked 130 hours in only 1 month of 2015, do you have to file a 1095-C for that employee? And it's a good question. And the answer is no. An employee who is in a limited non-assessment period or who is not an employee for the entire calendar year does not need a 1095-C. So when you hire a full-time employee, and let's say you offer coverage under a fully insured plan, it's offered upon date of hire, And even if the employee elects coverage, if he terminates before the end of the third full calendar month of employment, you don't have to give him a 1095-C for that year. Of course, if he enrolls in self-insured coverage during that time, he will need one, but if he never makes it out of the limited non-assessment period, then he doesn't need a 1095-C. The rub here, though, is that the employee has to be otherwise eligible for coverage. So, if you have somebody working for you for a couple of months, he's never going to be eligible for the plan, but he works over 130 hours one month, he needs a 1095-C because he doesn't have that limited non-assessment period because he's not eligible for coverage. This is a nuanced issue, but it's important. So if there are further questions, I can maybe circle back at the end if there's time. Next question is, our wholly owned subsidiary is also filing and will use their own 1094-C as an authoritative transmittal. As a whole, we have 400 employees, but apart, we each have under 250. Would we have to file electronically? No. Each ALE member is filing fewer than 250 forms, so you don't have an electronic filing obligation. Next question. We are a self-insured employer. We have multiple entities, and each entity has their own tax ID number. The self-insured health plan is administered by the main company. Do we need to file a separate 1094-C for each entity? And the answer is yes. Each entity with its own tax ID number that has full-time employees must file their own 1094-C, which will be the authoritative transmittal for that particular tax ID number. Next question, if you are self-insured and have fewer than 50 employees, do you issue the 1095-B or does it need to be the 1095-C? It actually must be the 1095-B. You cannot use the 1095-C forms unless you are an applicable large employer. This next question is a good question. For new hires and terminated employees, we only complete the boxes, line 14, for when they were eligible, correct? So if they started in January but weren't eligible until March, we would mark March and beyond, right? And the answer is no. When you are filling out the 1095-C, you must have an entry in every month of the year, either in the all 12-month box or in each month, the box for each month. So for an employee hired in January that wasn't eligible until March, January and February would be 1H in line 14. Line 16 would be 2D as in dog for the limited non-assessment period. And then March and beyond, line 14 would be the offer of coverage, and line 16 would be any applicable safe harbor, like 2C if he enrolled, or maybe 2F if he waived coverage, but it was affordable under the W-2 safe harbor. Can you explain how to use the W-2 safe harbor method? This is actually an oddly convoluted safe harbor. It basically requires that you use box 1 W-2 wages to determine if coverage is affordable on the year. And there are rules that will prorate wages for partial year offers of coverage. And the other little nuance to the W-2 safe harbor is that if you're going to use it for a particular employee, it must be used for all months of the year in which the employee is offered coverage. So as an example, say you have a plan that renews in July, and an employee enrolls in January through June, and then in July he decides he's not going to take the plan anymore. And so he's waiving coverage July through December. You cannot use the W-2 safe harbor for that employee if you're marking 2C in the months prior to July, because you would have to use 2F for all months of the year in which the employee is offered coverage. This is, again, one of those weird nuances to the rules, but suffice to say, I really like the rate of pay safe harbor. I think it's much more straightforward for the average employer. Next question is, what about someone who terminated prior to becoming eligible? Will we still provide them a 1095-C since they were full-time? Piggybacking from the previous in question, the example could be they were hired in January but terminated in February and were never eligible. So that's fine. You don't need to offer them coverage as long as they were otherwise eligible for coverage but for having satisfied the waiting period. So they had to be in an eligible class. If they were never going to be eligible, no matter how long they worked, then you would need to give them a 1095-C for every month in which they worked full-time after the first month. Next question is, I have a couple of questions regarding the codes. If you want to go post them, I'll try to get to them. Next question is, where do we electronically file? That is probably a good question for the folks at Comply Right. They may be able to direct you to a good vendor. Otherwise, you can go to the IRS website and you need the AIR, the AIR system, and that's how you do the filings online directly with the IRS. Next question is, we have a lot of part-time employees who do not work 30 hours per week and therefore are not eligible for our insurance. What do we do if they add up to additional FTEs? Do we have to offer those part-time employees medical coverage? Because we do have 50-plus full-time employees. No, you don't need to offer coverage to anyone working fewer than 30 hours per week. The whole concept of the FTEs is just for purposes of determining if you're a large employer. 2 part-time employees might equal 1 full-time employee for counting purposes, but that doesn't mean we have to offer those two part-time employees coverage. Next question is, I want to clarify my first question. I wanted to, just bounced away, hang on. I want to clarify my first question. I wanted to be sure that we only need to file one Form 1094-C and 1095-C, even though we were self-insured and fully insured. Someone told me I had to do 2 separate forms for the split in our insurance. No, you would not do 2 separate forms. You're a large employer. You're always doing the C forms and completing Part 3 for the months of self-insured coverage. You don't need to do the B series forms. This is not part of the requirements. That's not correct. Next question is, just to confirm that employers under 50 employees do not file the 1095-B. Does the insurance provider provide employees a 1095-B? That's right. As long as you are under 50 employees and are not self-insured, you have no filing obligation, and the carrier will file the forms on your behalf. Next question is, so insured employers don't need to file 1095. They don't file the 1095-B, but they do file the 1095-C if they're a large employer. Next question is, does every employee, regardless of how long they work for you, say they only worked for 1 month and quit, have to receive the 1095-C? I think I addressed this one already, so I want to move past this one because we have time for another 1 or 2 questions. We started offering insurance beginning December of 2015. Do I need to complete 1095-Cs for everyone employed in 2015 or just those in December? You need to complete 1095-Cs for all full-time employees for every month of 2015. You have full reporting requirements even though you've just started offering coverage in December. So obviously you'll be putting down code 1H in line 14 for the months prior to December. And then maybe if you had non-calendar plan year relief, you might put to I in line 16. That's, of course, going to depend on the facts. I have time for one more question, and then we're going to have to close out. Medical plans effective first of the month following 1 month of employment, what code to use? Would it be box 14 for those months for the waiting period, or would it be box 16? And if so, what code? So for the first month of employment, when coverage is not offered for every day of the month, the code is 1H in line 14 and 2D as in dog in line 16. And then in the first month, when you're offered coverage every day of the month, then you switch over to 1E, whatever your offer code is, in the applicable safe harbor code for line 16. I see we have a ton of questions left, and I would love to continue on, but I do have to get to another appointment. If folks would like to email me, you can get my contact information either on the web or from ComplyRight, and we can set your company up as a client, and we're happy to provide you direct legal advice. Or you can also direct questions to ComplyRight. So with that, Stephanie, I think I'll turn it back over to you for any closing comments.
That's great. Yes, we did cover a lot of questions in about 20 minutes or so. So thank you all for participating throughout the whole webinar, and thank you, Stacey. I will share your email address in the chat so that if anyone wants to reach out to you, they can for further conversation. And before we sign off today, I would like to invite you to next month's webinar by ComplyRight. I did share the registration link in the chat, but it is going further into ACA compliance and simplifying it all for you. We'll have Stacey join us again on March 8th, so stay tuned for more information. We have discovered that ACA reporting is a complex topic, and in our next webinar, we will break it down even further for you. So we'll have a clear and practical discussion with Stacey next month on what you need to know and do to comply with the new requirements year-round. So we'll touch on ACA reporting requirements specifically for ALEs and get into a lot more detail on the 1095 codes like some of you have asked about. And we will also get more into the details on the specific employee data you need to gather from HR, payroll, benefits, and time tracking resources year-round. This was an informative session today, and I will share Stacey's email in the chat if you all want to hang tight. And thank you all for staying with us during the full hour. Thank you, Stacey, for presenting again, and everyone have a great day.